Hi, this is Dan Collins coming back to you from Traders Expo New York. I'm with Ashraf Laidi, and Ashraf's been doing some really interesting work working on the intermarket analysis with the dollar, gold, and the Chinese yuan.
Yes, I mean, it may sound very complicated and very, very mysterious, but listen, let's look at it. This summer, in June, when the dollar was peaking and was pushing higher, it dragged the euro from 113 to 112, and then it dragged sterling below 130, and dollar yen was testing 114. And you know what happens, the herd, the dollar is pushing higher, but what level really matters for you to say, are we ready for the next breakout? Are we ready for the next breakout? And when the herd is about to imply that, and you're watching CNBC and Bloomberg, and they're all talking about dollar strength, is it really time for you to be a contrarian for the sake of being contrarian? Or is there something more to it? Or do you just ride the wave and buy dollars? And for me, what I've learned is that when I incorporated the trade talks between China, between the US, the 7 yuan level against the US dollar became a big ceiling. Many experts said it's going to break, meaning the dollar is going to break above 7. And I'll tell you what then. As long, the dollar touched that level many, many times, and thus drawing what you call a great example of a failed test or a failed break. And as long for me as the dollar did not break above 7, that meant to me, even though euro dollar broke below 113, it is not going to go to 110. It's not going to go to 109. And that gave me the confidence for me to go in and to sell dollars against some levels.
Okay, and we've noticed recently, everyone knows the negative correlation between gold and the dollar.
Yeah.
It doesn't always hold up.
Yeah.
So is using this to saying this maybe gives you the reason why it's not acting like you're supposed to?
Okay, so in general, it's still holding, but be careful, beware, do not follow it tick by tick. The correlation does not go in tick by tick. But I'll tell you why I call this the US dollar, yuan, gold, a triangularity. Because US dollar failed to break above 7, and gold held up continuously. Whether you're looking at a trend line of the RSI, whether you're looking at the 933 stochastics, which I use on the weekly basis, gold held up. And it continues to be in a series of higher lows. And the dollar versus the yuan failed to break above the 7 level. I could bore you to death, I could speak about the fundamentals. I could say that the Chinese, they're allowed to weaken the currency but not beyond 7, because that's part of the negotiations. The unwritten agreement with Trump basically said, we want you to put a forex component to the solution, meaning don't let your currency cheapen below 7. And as long as that held up, instead of if you are selling dollars and you are panicking and you are in the red, and as long as these levels don't break, it gives you the idea to either stick with your position or to double down.
That's interesting. Do you have another example of this intermarket?
Yes. I mean, you can go into the sterling. Let's say, if you think, I live in London. I've been in London now for over 10 years, and I think that there is definitely higher lows on the trend line support, whether it's the RSI on sterling versus the dollar, or whether it's the prices, the closing prices. And I do think that they cannot afford to have a hard Brexit. And I think that 127 was a big support. If the market goes back towards 128, 129, that's another. If the premise is to continue to be able to sell dollar at the highs, then I think sterling around 127, sterling at 128 is for me where to buy it. Another one is dollar versus the Swiss. I know it's a bit expensive for people to hold the positions, but dollar 102.00 is a big resistance against the Swiss franc.
That's great. And I mean, you mentioned Brexit. We're talking about the U.S.-China trade deal that keeps on moving the market when some specious rumor comes out.
Yeah.
It's really an important time to understand forex markets because there's some drivers that can really move.
And there's a lot of noise that you get from the TV, but you got to look at the parameters and the levels. For me, it is the 7 level, a dollar versus the yuan, 127 versus the sterling. We may see 126.80, but 111.90, 112. But more importantly, 1300 versus gold. That's a big support for gold.
a lot of technical levels. Ashraf, thanks for being here.
Thanks very much for having me, Dan.
It's been Dan Collins live from Traders Expo, New York.